Hello, chart watchers and Decision Point faithful. Welcome to this Monday, August 17th, 2020 Decision Point show with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, I want to welcome you to the show. And for our regulars, of course, welcome back. You can find us here on Mondays at 7 p.m. Eastern Time on StockCharts TV. Glad you're joining us. All right, well, we've got lots to cover, but I do want to introduce my father, Carl. How are you doing today?
Doing great.
Trying not to melt. I know that's...
Yeah, we're having a real heat wave, that's for sure.
Yeah, it's been pretty bad. I was looking at the forecast, and I think we have, of the next week, we only have 2 days that aren't in the hundreds, and the 2 days that aren't are 98 and 99, so not much of a break there.
And rolling blackouts, so.
Yes, that's true. We've already been getting those notices. All right, so let's look at our agenda today. We are going to cover all-time highs. Of course, the broad markets are making those. We'll look at those charts. Also, I want to show you some of the negative divergences that we're still seeing on our charts. Just something that you should keep in mind. Carl's going to talk to us about stock splits with, of course, some special attention to Apple and Tesla, which are going to be undergoing stock splits soon. We will be covering gold because it's pretty exciting right now. I spent some time on that in today's edition of Your Daily 5, which you, of course, can find on the StockCharts YouTube channel. And so I'm definitely excited to talk about gold with Dad, and then also gold miners, and my diamond of the week will be the final finale for the Decision Point show. So let's go ahead and get it started. All right, we are starting a new Decision Point trading room, and it is free, and it will be beginning a week from today on August 24th. We'll be on live from 11 a.m. Actually, it's going to be noon p.m. Eastern. I need to fix that slide. My apologies. So yes, you'll find us at noon on Eastern Standard Time on Mondays. You do want to sign up for our free email list, and that way you can get registered for our free trading room. All right, well, what do the Decision Point scoreboards look like right now? Well, they're all pretty much green. We have a few exceptions, and that would be the NASDAQ, which honestly is still holding on to a PMO sell signal. So we got it, we had that difficult time with the NASDAQ, and NASDAQ 100 pulled price down and consequently pulled the PMO below its signal line. So that's what that red one is right there, that sell signal. As far as these other two, these are long-term PMO signals, and you'll find these on the monthly charts. So if you look at the monthly PMOs, that's where you will find these signals. And currently, both the S&P 500 and the Dow are showing sell signals. And even though they might show a buy signal during the month, the signal is final on the final trading day of the month. So sometimes that does confuse some people, but right now that's what we're looking at. As far as the sector scoreboards go, very much in the green. Financials, we're still waiting for a golden cross. And for energy, we're also waiting for a golden cross to get us a buy signal. But with energy, we also want to see that 20-day EMA cross above the 50-day EMA, or a silver cross, as we like to call it. And that, honestly, is just now getting ready to happen. In fact, I'm going to just lead right into that energy chart so you can get a peek at what we're talking about. And right here, it's a lot more apparent in the thumbnail, but this is the crossover we're waiting for right here. The 20-day EMA hasn't quite crossed above the 50-day EMA, and boy, Dad, that should probably happen any time now, I would think.
Yes, it is. Many times when they're this close, I'll just go ahead and call it, because the next day it's going to change. It will change tomorrow unless price comes down closer to those EMAs, and it might not. But if you look in, the last 3 months, it's been flat. This will be our third crossover in 3 months when it crosses over, and it's flat. So it's kind of meaningless when you see that kind of a pattern.
Right, which is why you really want to pay attention to a lot of these indicators we have here on the bottom.
Right.
They tell us what the kind of participation we're getting. You know, we're seeing a little bit of an improvement here. Of course, we're getting that pullback today. We got a nice move on Friday, but certainly pulled back some of those profits on XLE. Okay, so let's go ahead, and I do want to look at our main chart, which would be our SPY chart. I'm going to use the 1 year daily to start off here. So what we're looking at, of course, like I said, is new all-time highs are coming through on all of the broad market indexes. In fact, I can show you right here that we're getting a lot of new all-time highs. Obviously, small caps, mid caps still aren't really participating, but the fact that we did see the NASDAQ make that new all-time high, you can see that the SPY has now made the new all-time high. It actually reached an all-time high before the S&P 500 itself, but the ETF did get its all-time high last week earlier. And you know, so we're seeing the kind of movement we want in these rising trends. I especially like seeing the pickup as far as small caps go and mid caps go. They're still pretty far away from their all-time highs, but the fact they're finally starting to challenge this previous top from June, I think is constructive.
The all-time high for the small caps is 3 years ago.
Oh, that's true. This doesn't even count.
No, that's part of the bear market.
Yep, exactly.
Yeah, it's been in a bear market for about 2 years.
Yes, good point. All right, and then a few of these negative divergences that I was going to point out. Right now, I know for our short-term indicators on the Swenlin trading oscillators, as well as the percent stocks above their 20-day EMAs and percent stocks with their PMOs rising. So you've got the PMO rising, that's what this one is. You know, we had a pretty decent rally today. So I don't really like seeing the STOs are continuing lower in the shorter term, but you can see the negative divergence that still is apparent here. We didn't quite get that from the STOV, but you can certainly see it with those percent of stocks greater than their 20 and percent of stocks with their PMO rising. And again, I don't like seeing stocks within the S&P losing momentum, their PMOs turning downward, especially when you're looking at some rally days here.
And that hasn't updated yet today.
These ones have not. Yeah. Okay,
right.
Good catch again. Let's see if I can get that. Nope, not quite. We'll have to come back and look at that because I definitely will have some serious reservations if we're not going to see these at least tick up today after the move that we just got. And then I believe the other one that has some of those negative divergences on it would be our intermediate term indicators. And as you can see, typically when we get these negative divergences, they come before a pretty serious decline. And so, you know, we're seeing the same information. You can see that right now these indicators are trying to top. In fact, I'm going to take a peek at that thumbnail and get us a better look. And yes, as you can see, both of these are now moving lower. So we not only have that negative divergence in play, but now these indicators are joining those Swenlin trading oscillators and are starting to move lower. So not the greatest backdrop for what we're seeing with getting into these new all-time highs.
Can we get the 6 month up again? Something I wanted to mention there.
This one.
Okay, 1 year is fine. Okay, so notice the contracting volume notation on that. It did expand today. Volume did, but it's still well below the 1 year average daily volume.
Which is, yes, right there. So
that's not particularly great.
No, I mean, I guess it's a good thing it did go up slightly, but ultimately it's still really below the average. And one of the things I noticed is we are still seeing the VIX above that its moving average. So I think that that's still positive in the very short term. But we'll be watching that very closely because we've been getting these punctures of that upper Bollinger Band on the inverted scale. And typically we get those and you start seeing, you know, a couple days of a down side movement, but it can also be the start of a little bit more of a longer term trend.
Well, it's, you know, it's really, that's an overbought reading right now, touching the top band as we
Yes.
display it.
Yes.
So, you know, yeah, it's overbought. It's not trying, you know, it's not extremely overbought, but yeah, it's overbought.
Yes, and we're getting this squeeze, and I've found typically when the squeezes end are usually on downside moves. It's just something. I mean, I don't know if there's scientifically anything there, but typically I've noticed we get when we start to see that squeeze, it usually is relieved by a downward move. So
Right, right.
okay. So let's see, next up, I'm gonna pass it to you to talk about those stock splits, and then we'll come, we'll go into gold.
Okay. Okay, everybody knows, I'm sure, that Apple will split on the 31st. I think that's the ex-dividend date. Just to that, you know, just to cover some ground on it. A lot of people don't know some of the technicalities of stock splits, but you haven't. You have a distribution date, and what this applies to dividends as well. And let me just address that. But if you want to see when the dividend's going to be, it's under the overlays events, select that, and that'll show you the stock splits and the dividend X date. Now, the distribution date, the distribution date is for the dividends, you have to own, that date would probably be around here, say, for that particular dividend. You have to own the stock on that date in order to receive the dividend when it's distributed. Okay.
Mm-hmm.
But Apple, I did mention Tesla, but I'm not going to show us charts Tesla for this particular presentation.
Mm-hmm.
But here is the last split for Apple was back in 2014. And you can see the dividends are marked this way. Splits have the big spike up to the to where the split takes place. This was a 7-to-1 split. Going to be a 4-to-1 this month. Okay, now one of the things you should probably understand about how the split is handled, how it affects the data, and that is for a 4-to-1 split, price data is divided by 4. But to keep the volume straight, it is multiplied by 4 because you have fewer shares, so you have to expand the volumes to match what it was, you know, based on that split. Am I making that clear, Erin?
Yeah, I'd say so.
Yeah, you've done these a few times.
Yeah.
But let's see. So we've got the distribution date, we've got the X date. The X date is the date, it's the X dividend date, and that's the day of the split. That's the day that it starts trading. X dividend means without the dividend. So that's the name comes from the dividend, but it also applies to the split. Because actually, a split is a distribution. It's a distribution of shares. So for every share you have of Apple, and at the end of the month, you'll receive 3 additional shares. So you have 4. Now you have 4 for the one you had.
I haven't seen too many of these kinds of splits. It seems to me for a long time we've only been seeing those reverse splits, which of course is the opposite. the price
Right.
gets too low, so now they have to inflate it and do a reverse split.
Yeah, it used to be, you remember that we were handling splits all the time. When they got to be $100, when the stock got to be $100, they'd split it. So they could keep the prices low so people could buy a few shares. And he didn't force people to become odd ladders. You know, people like to buy an even round number of shares, like 100 shares. And odd ladders can't afford 100 shares. They have to get fewer. And so that was the rationale behind that. But
of course, now you can own fractional shares, so that kind of changes the dynamic.
yeah, that's a new weirdness.
Yeah, we won't go into that.
Yeah. Okay, and there's one other aspect to this I wanted to. So back in the day, here's showing some splits, and this is 2000 and this is 2005. And one of the things you kind of looked for after a split was for price to go down. Here it certainly was perfect on that. And here it's still basically it's kind of a sign that stock is going to be distributed. They're making it easier for the little guy to buy so the big guys can get out of the position.
Okay.
That's the rationale behind that. But, any questions on that?
No, it doesn't look too good generally after these splits to see these drops. That's certainly not.
Right.
Wow, a big negative divergence there with that OBV on that on that monthly chart.
Right.
Just something I noticed. Okay.
Okay, let's move along to gold.
Sure.
Okay, this is what we got for gold today. Notice we had the breakdown and actually stopped on this rising trend line. Now, I'm not sure that's going to be the end of the decline, but I was thinking it was going to roll over and probably retest, but it's taken off. So maybe this is going to be it.
I very much like gold. I like that bounce, not only off of that rising bottoms trend line, but that 50-day EMA. I mean, they coincided right there. You can see it, and
yeah, really.
Price hit it and bounced. I mean, I don't know. I'm liking gold despite that sell signal on the PMO.
Oh yeah, the PMO is going to react, but yeah, in a bull market, PMO crossovers like here we had one. PMO fell for about a month and a half, and basically it was a consolidation. But one of the things I wanted to talk about gold today was, the price and the quotes. And, here we closed today at 1998.70. But that's a continuous contract gold. You actually can't buy this continuous contract number. So let's look at other ways you can get a price on gold. Let's go to, I lost that one. Let me get it up again. Kitco.
Yes.
This is spot. This is spot gold. This is on the New York Mercantile Exchange. It's closed down. This will be, now, and if you have this price, you can follow the spot price. And that doesn't involve a future contract. As I said, spot. They sell all kinds of commodities on spot. Now, on the TV, if you're watching the business channel, you're going to see a price of gold that comes up there on a regular basis. And that is a continuous, no, that is a near contract futures price. So that will vary. Let's see, it's about $10 higher than the spot price at any given moment. And then if you want to follow it, Market Watch has futures prices. If you wanted to get a price of it in the middle of the night, or say early in the morning, or after the market's closed, you can. This shows what everything closed today. But here, if you click on the futures, you get the futures price on gold right now. I'm not sure. Yeah, this is the Dow's down 25 in the futures right now. I'm not sure about this gold price, but if you click on that, it'll show you there we go. It shows you the futures contracts, and you can see this shows you where they're getting the prices that they're quoting on the TV, et cetera. It shows, and there'll be the near contract, as I said.
Got it.
Okay, and then let's see. I wanted to show if you're actually interested in trading, the easiest way, of course, is without getting into the futures contracts, et cetera, is to trade the ETFs. And so here we have GLD, and I'm looking here just to do a little analysis. There's the 2011 top, and that's a resistance line on this chart. The gold price is still above that.
Right.
And then there's, this is not the only one. IAU is another ETF you can trade. And what's the difference between IAU? These are iShares, and then
GLD is.
Yeah, GLD is a ETF, but the difference is in the volume. Actually, this volume on IAU is about twice that of GLD. But no, never mind. GLD is still has plenty of volume, so it's not like you're trying to choose between a very low volume stock and a high volume stock. And that's the end of that.
All right. Really interesting. And yeah, full disclosure, I do own GLD. I'm pretty happy with it right now. I wasn't before, but it's a it's a natural pullback that we're seeing in gold. So I'm not. It's a longer term hold for me. Really constructive. Love that. Didn't love that move to the downside, of course, but we're certainly seeing that recovery. And I honestly think it's just a lot of people are finally like, I didn't get in and now I can, because it's not as overbought. So I'm looking for good things. And of course, if gold's going to do good things, more than likely we're going to see the gold miners enjoy a rally as well. And this morning, I did present this chart on Your Daily 5. At the time, I think gold miners are only up about 3%. Crazy to see them up this much. But this is kind of the area that I'm going to be concentrating a little bit on in this coming week. In fact, my diamond of the week is going to be a miner, I should say, not in the gold mining in particular. But this is an area I just wanted to show. We got that pullback just like gold did, hit that 50-day EMA again, just right on point, hit it, bounced. And today we had a gap up. So it looked like this is a reverse island. And now we're trading and we're above the 20-day EMA. Yes, we haven't gotten above, back into the rising trend we had previously. But it's just a matter of time, I would say. You can see the PMO is now turning up. We're getting a little bit of improvement as far as some of these other indicators. These have not updated, but I suspect when they do, we're going to see those ticking up as well. So I really like the gold miners right now, and you can even see with the RSI, it's gotten, we had that big pullback again that took it out of overbought territory, and now we're back in the positive zone above that net neutral 50. So liking that. So what is my diamond of the week? Well, my diamond of the week is going to be Wheaton Precious Metals, and I'm going to make this big for us. And here are a few things I like about it. I'm going to go ahead and annotate it right here in front of you. So this I'm looking at is very short-term support, right? Well, here's that island. You can see the island was fell below, but we made that support level right here. We didn't even have to go all the way down to test it. Didn't even have to go down all the way to the 50. And now we've got, like with gold miners, we're seeing that trading happening above that 20-day EMA, which I like. So it's covered that gap, if you will. And you can see that 5-day EMA is just now crossing over the 20-day EMA as well. And that is a short-term trend model buy signal. You can see the PMO is starting to turn up, and obviously we've got that RSI just moving back into positive territory. You know, OBV, not looking that great right now, but I think this negative divergence we had here has really played out with this decline. So now I'm just going to be watching to see what happens if we can get over these previous tops as we hopefully start to see a big breakout here. If I'm going to go and look for stop levels, this is how I do it on my diamond reports. I just come in here, I line it up pretty much with the price we're looking at now, and then I go down to what is, to me, the next level of serious support, if you will. So if we were to come down just right to that bottom, it's about 9%. I would probably want to take it a little bit lower than that. But again, this is a range, so everybody has their own tolerance for what they like and what they can't. And then if I'm going to look for an upside target, let's just look what's going on right now. If we were to get just back to these tops back here, that's like a 10% gain just to get back to the tops we had 2 weeks ago. So not out of the question, in my opinion. And I think this chart's looking pretty good. And we won't need to do that. Let me just close this. Here we go. So that is the diamond of the week I have for you, but I have a little more time. So I'm going to show you my other one that I'm scouting. There's 2 of them I'm scouting right now. One of them is Newmont Mining, and this is a gold miner in particular. And again, you're seeing that same similar action, that reverse island, the gap being covered, trading going on above the 20-day EMA, 20-day EMA positive crossover happening here soon. A lot of good stuff. And you can actually see with Newmont Mining, we do have the PMO that has actually turned up as well. And the other one that I thought was interesting that I've looked at is Yamana Gold. It's a lot lower price point, so be sure and position size properly, because you might get some big swings to the upside that are nice, but they can be a little difficult to handle on the downside. I'd say for Yamana, the only issue I have is it hasn't covered up that gap yet, but if it follows suit with its compatriots, I think we'll be pretty good here for Yamana Gold. So these are the 2 that I'm scouting, but I'm going to go with Wheaton Precious Metals as my DecisionPoint diamond of the week. And if you want to know more about DecisionPoint and how to get to our diamonds, you can do that over in here. Let's go to the home page. And I also want to encourage you to come to our homepage, sign up for that free newsletter. This is where I'm going to send out the links for that free DecisionPoint trading room. So sign up, there's limited space. Get on the newsletter, I'll send out that information and you can register right there. And that's all we have today. I wish you all a happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.